So I asked Twitter where I could get the best information about charts and how to trade with charts. And the answer was absolutely unanimous. Everybody said, get Kazonomics on the show. So I get Kazonomics on the show. This guy is not your normal chartist, as you guys can see, but he seems to know everything that he's talking about when it comes to charts. Kaz, give us a little bit of background about how you use charts to trade, or what you look for.
I look for fractal patterns of behavior that occur on all time scales. Price is a graph of human behavior over time. It's more of a consensus of what we believe about the fundamentals as price charts age than it is a graph of fundamentals. A lot of people make the mistake of thinking that they're graphing fundamentals, that you're graphing human behavior.
So what you're saying is that it doesn't matter what you're actually trading, the human behavior is the same regardless.
Regardless, exactly. It's why we can see crash cycle charts on the NASDAQ, the Nikkei, cryptocurrencies, and any time scale. You can see what's known as an emotional crash cycle on any asset, because you're graphing people. It doesn't matter the asset. We all react the same to losing half our money.
So let's see if your approach actually works. You sent me a chart. The chart's called the Bitcoin weekly log chart. What can we see in this chart?
What you're seeing is actually a bull wave that extends from late 2011 through till the climax high with Mt. Gox's debacle that happened in the end of 2013. What I'm showing you in the orange boxes is local accumulation patterns, which we call shockwaves, that occur along the bull tide until you reach the highest one at around the end of 2013, where it had the lug out of the glasses pointing. In that box range, you can see a massive volume spike that occurs when we have a dump move that happens up there. That dump move is the beginning of real selling. It is the absolute highest volume that you see in the last few years until that point, and it leads to a 2-year decline or bear market that ends in late 2015. Once that bear market ends, we actually see the same structural pattern in the second bull tide that leads out of there after September and all the way to where we are now. In the box range at the end of that tide that we have at this current date, we actually see the same kind of volume climax, which is the highest volume spike since we broke out of the low box range accumulation of the bear market. It either signifies real selling again, like it did in the top of the last bull tide, and with what's going on in China, we have some fundamental shifts in the market that are not quite clear. So either this massive volume climax is going to lead to further selling through the volume of climax low, which happened at about 3,000. And if we should break that, we could expect possibly to enter a second bear market.
So I'm looking at this chart, and what this chart's saying to me is beware, because we're going into a second bear market. You sent me another chart. It's called the Bitcoin daily chart. What am I looking at on that chart?
On the Bitcoin daily chart, we zoomed in to the structure you're seeing in that last box range, and we have the dump and the massive volume climax. Two things to watch. You shouldn't really hang your hat on one specific bias. The real reality is, if we manage to break the volume climax level, then there's a good chance for further selling. However, if we can violate the downward trajectory of this decline in this range and structure out closer to that green box I put under 49.70, you may stage for another rally to break highs. If we can break highs with that volume climax, there's a good chance this thing just absolutely moons through 5,000.
So as a trader, what are you doing today? When I look at this graph, what does it tell me about what I should be doing right now, today, given the levels of Bitcoin, where they are today?
Well, where you are, if you look at Bitcoin's history, it's got a finite supply, and we keep on having aggregate demand shifts through adoption. There's still corporations taking interest in this. There are central banks interested in blockchain. You have now a celebrity wave of rappers and movie stars starting to push crypto. This is very reminiscent of 1999. So you can have one more, what we call a dumb money wave, where just the absolute last people who've ever heard of crypto show up in here. And if that happens, and we manage to break highs with that going, that's a lot like reminiscent of 1999, where you had like hip hop stars talking about the NASDAQ. So if we get one more injection of capital from one more tier of people who are outside this market into this and break highs, we could see this extend. As far as being on the daily chart right now, what you should do, you need to exercise some patience and let this further develop.
The Ethereum graph, what are we looking at in the Ethereum graph?
In the Ethereum graph, we are looking at the formation of what looks like one massive shockwave. The pump in Ethereum is absolutely epic. You have a core position down at about $13 in the accumulation, and we ripped 400. So generally in markets, you move from high volatility situations to low volatility situations and back again. Ethereum really needs to work off some of the energy from the June climax that led to this high. It's still narrowing its range and consolidating for positions that will ultimately lead to another large scale move. But right now, Ethereum, after coming off such a ridiculous performance this year, is going to need some time to work off this energy.
So basically smaller and smaller and smaller and smaller shock waves until we break through those lines. Kaz, you're not the normal trader, you're not the normal chartist, but you are going to be a normal, regular feature on my show, that I can promise you.